Holy shnikes. Today was a big day in uranium. And the question now, of course, is what happens next? Is this the start of something big and long term, or are we going to face resistance and roll back over? I'm going to get into all of that. I think I have a pretty good idea of what we're looking at here. So just to start off, in the case of Cameco, you had this gap open to start the day, and it was obviously on huge volume. And this is not to be ignored. This is a pretty big deal. Because it broke over some key resistances here, not only this trend line, but also two moving averages, you can really consider this a breakaway gap. Breakaway gaps tend to run away, not come back, when they have the volume to legitimize them. And so far, that's what we have. It looks pretty good. You look at Cameco by itself, I would say that this looks like the start of something big. But I will urge you with caution that this pivot point here that we had originally projected for the potential double bottom is still going to be near-term resistance. And I think the same strategy is still going to apply, which is to say, if we fail, we bail. I think we treat it the same way. We could have a delayed attempt at this here. We're just going to have to watch and see. But I can tell you that just on the Cameco chart alone, that this looks quite good. Now, something else to be on the lookout for. You'll notice that we already had on the daily chart 1, 2 gap opens. Typically, when you get something like this, if you get a third gap open tomorrow, I'm just going to paint a picture for possibilities here. If you get a third gap open tomorrow that happens to stall at this point right here, I think that's going to be a pretty good indication that we're going to have some selling. Okay, I can just tell you right now that I would be looking forward to selling if we were to get something like that. So you'll see the confluence of the third gap open with a turnaround on resistance here, or a tough time getting above it. That would be a bad sign. But as we go across the board, we'll flip to UEC. You can see that last week we had talked about the potential for this inverse head and shoulders. Now, this was actually my option B. I was anticipating this coming down and the market kind of trading sideways or rolling down, maybe breaking some supports here on a couple of names while we all caught down, with my second option being this inverse head and shoulders. And clearly, the inverse head and shoulders is what we're getting. Now, with that being said, you're going to see the same kind of trend across the board and everything, all right? So you got these gap opens, you have these breakaway gaps. That all looks very bullish. These are good things. But on the rest of these names, as you will see as we go through the charts, they're all kind of stopping here on the end of the day at this neckline, all right? So we'll take a look at NXE. All right, it broke above, it looks pretty good there. It's hovering just under the 200. Did not break above that. Not as strong as some of the other names. The case of Energy Fuels, again, it's got confluence with UEC. The potential for this inverse head and shoulders was stopped exactly at the neckline, though it does have, again, the same breakaway gap above a key resistance level on the short-term time frame. So what you're seeing here is the perfect setup for this inverse head and shoulders to play out. So if we're going to get it, it needs to be relatively in the near-term future. So you'll want to have some follow-through with this massive volume that we saw today. You'll want to see follow-through on today's action. You'll want to see the market say, okay, this is it. We're obviously moving forward. And then other people come in and chase this momentum. Any kind of near-term failure to run this higher, especially as we hit these key critical levels like I'm pointing out right here, it's going to be bad. It's going to imply that this is going to be another failed breakout, just like we had a failed breakout of this W pattern top here, okay? So this is essentially a double retest. We're retesting not only this trend line, but this failed breakout here, all right? And you see this confluence in a lot of these smaller names, all right? See, look, stopping at that same point, you see this again across the board. So you're retesting the top of this W pattern on these smaller names. To reiterate again, the volume looks good. All that looks great. But you'd kind of want to see, a little bit more. Now, in the case of Dennison, check this out. Dennison had shown weakness back here, all right? And it failed to perform relative to its peers on the initial ramp up of that last rally. And I had pointed this out to you guys. I told you guys I got out at $1.19. I sold out. And it continued to outperform the rest of the sector. And you see it shares confluence with getting above this same kind of neckline here. All right, we're getting a pause at the end of the day. You got an upper wick at that exact moment. So all of that said, what it's really telling you is that we need a couple more days to see. All right. I actually cannot encourage you to go buy and chase this yet until we break these necklines, because a day doesn't make a market. All right. Despite how good it looks, despite how good that volume is, I can appreciate it. Trust me, I'm looking at it. Despite all of that, you need follow through. And if you don't follow through, you're going to come back down just as fast as you went back up. I speak from experience on this. You need follow through. So what we're looking at now, all right, is the weekly candle close. So we'll just look at them as they are right now. Ideally, you would not want to see Cameco struggling on this original double bottom topping pattern target here. You need to get above this 2820, or at least not struggle with it. All right. Better not to get to it and not fail than to get to it and fail. All right. Trust me on that one. UEC again, you'll want to see follow through. You'll want to try to break this neckline. If you can't do that, we're going to be in trouble. I will say in the case of SPUT, it looks good. And this could be a game changer here too. If they can get positive on the day, I don't even know if they did. Let me look. So yeah, I think that they are going to be positive now. Their net asset value. So if they start buying pounds, that could be a significant driver here. It could at least open the doors to narrative. Narrative is powerful. Whether it's fundamentally going to change or matter in the actual uranium contracting cycle or not, kind of not relevant in terms of narrative. I mean, narrative is more powerful than your reality. So if they can start buying pounds and moving the spot price, this could generate that cycle that you're all familiar with, where a price begets more price. It becomes reflexive, and that's a very, very, very powerful emotion in markets. So this is an extremely positive sign too. The volume was quite good, and it broke these key levels. Let's check it out on the weekly. We're hovering back above the 50. Essentially what we did is we broke out of this descending wedge, came down, rode it, tested it multiple times, rallied back up strong. Again, this double bottom pattern is quite strong. Well, now let's say we were to get a breakout. The question next is, where would we go if we break out? Well, this would be a measured move. So in the case of UEC, what you do is you take your neckline and you measure down to the furthest point, which should be the exact center, okay? About right here. You can see that it's about $1.72, okay? So if we move it up, assuming it breaks out about right here or something, right? We'll come up $1.72. And that gives us a target of about 612. So in other words, it'll put us right back up here into the prior high. And you can extrapolate this across the board. We'll look at energy fuels straight to the bottom. That's 286. We'll measure from the point where it breaks out, go up 286. All right, and that puts us at $10.12. Again, it puts us right into the chop of the prior high. So if we can get follow through and get this breakout with volume to push it, then you can expect to look to sell there, or at least see what kind of reaction we get at that point. But that's going to be your price target, no doubt about it. Otherwise, some potential things that you could see to look forward to here is if you break out and then you come back down. If you break up above and come back down, that's actually sometimes very good if you get this retest and rebound on it, okay? But if you get what equates to a peekaboo, which is to come back up and fail back through, then you're going to have to sell right here because it's likely going to come all the way back, right back down here, okay? So in the near term, you're playing it like this. You need follow through for the breakout. It cannot be a peekaboo. It cannot come back down under once it goes above. It can retest. It can trade sideways on it. That's, in fact, quite a good thing. And then once you start rallying above, then you can feel free to ride the breakout. And so for any of you who are not positioned for this, for any of you who maybe you don't have anything, or maybe you have cash you want to add. Do you add right now? The answer is no. So if you didn't position anywhere down here or wherever, and you're looking to chase the momentum, simply wait. Wait to see if this can break through on volume. Or even better, wait to see if you come back for that retest. That's it. That's how you play it. If you can get that retest, that would be a buying opportunity. And don't FOMO. Don't FOMO this crap. Understand and appreciate. What do we say? $10.12. Okay, that's a 40% move. Why? There's no reason to FOMO when you have that much upside on a measured move on a breakout. Okay, so let's say you weren't in for this and you're not a part of this right now. That's okay, because if you get the confirmation of this inverse head and shoulders, you still have 40% of a measured move to gain anyway, and it'll probably happen in a relatively short amount of time, because these patterns are quite powerful too, and they break out rather quickly. So it's not like you're going to have to sit in it for 6 months to get that 40%. It would probably hit it relatively short time. There are some ugly signs out there for some things. In the case of SMR, I can tell you that despite the fact that it enjoyed quite the day of volume as well, had a pretty big upper wick here, which denied it really getting to or above prior highs. And the RSI is telling you that the move was a week. Okay, so you have a divergence here. It's small, but it's there. And that's telling you that this is probably not going to last in the case of SMR. All right, and so this does not look that good to me, honestly, and it's pretty clear on it. I would not suspect a breakout in SMR unless something really changes. Again, a day doesn't make a market, but the signals are here telling us that kind of this one doesn't look too good. Now, in the case of Silex, it's a bit more ambiguous because on the daily time frame, it looks pretty good. It's chopping sideways, essentially consolidating, building strength on the RSI. Not a whole lot of divergence other than some implied hidden bullish divergence there. But again, it's on the daily time frame. It's a short-term time frame. And that's tough to equate because the weekly time frame is telling you that it's actually really overextended. The weekly time frame is putting in some clear overhead wicks at key resistance. It's getting denied rather regularly. And it's very, very, very far away from its 50. I mean, that's a big deal. And so it's overextended on the weekly time frame, okay? But on the daily, it has a lot of momentum. So I would not look to add here. I just wouldn't do it. This does not look like a spot to buy. All right, it's simply too far away from its 50 with mixed signals. I would stay out of this one for now. You know, if you get back up to 350, if you haven't taken profit yet, you can consider taking profit in this area. It seems weak on the longer term time frames, though in the short term it could make a test up and do something crazy. Now, in the case of gold and silver, we're really seeing the same thing here, right? We're seeing this potential for this inverse head and shoulders on a slanted neckline. There's massive, massive confluence between these two sectors. The difference today is that uranium took off by itself and gold and silver just kind of had a nice normal day. In a way, I think that this is better for gold and silver because it's a bit more healthy. You'd like to see the momentum that uranium had on more of a breakout, but it's burning a lot of energy on the way to that resistance. And that worries me a little bit. But being that this is gold and silver, I can tell you we don't have that potential problem here. I think it still looks very healthy. I think we're still trying to put in potential bottoms here. I think that this is still an area of accumulation. I don't see any signs of technical weakness. I don't see any indications that going to break down. I mean, it just looks nice and healthy. It looks like we're going to get our own shot in the gold and silver space. Same inverse head and shoulders. And again, we know where the test will be. You can open up a TradingView account and put a line on this thing yourself, watch the price and see what happens when it gets to level. And if we roll over, then that's a pretty good indication that we'll probably come back down to this retest on the prior level support where we got the prior pivot. And I think that that will be a strong opportunity to add. If you didn't take advantage here, you should definitely do it the next time. I absolutely will be if I'm able. It's simply that strong. I don't see any reason to believe that we have any, if not much more downside than that. Again, technicals are kind of standing out, giving us confidence that if we reach that same level down there again, that we will be just as oversold, if not more oversold than we were the first time. So it looks very good to me. You know, a lot of people are looking forward to Jackson Hole and the Fed and what Powell's going to say. You know, this cat, you know, I think the markets are kind of waking up to what's going on here. I'm not really worried about what they're going to say. I almost don't even care. I'm at a point now where I'm ready to pivot from the Fed. I feel like Fed's destiny is already baked into the cake. I feel like I've seen enough, and I don't really care anymore. I'm ready to start looking past them for what comes next. And I believe what comes next has to do with macro events on a global scale, right? Some domino is going to fall somewhere else. Maybe it's Italy, maybe it's Japan, somewhere in Europe. Maybe some catalyst from the Ukraine war. It could be a lot of things that could happen that cause some domino to fall somewhere, spark a catalyst in the markets that brings on some kind of fear trade or some kind of inherent reason for the Fed to pivot, right? That they won't get blamed for. I can just see this kind of stuff playing out. And I honestly don't really care what the Fed has to say anymore. As much as I've talked about them on this channel, looking ahead to what they were going to do, I believe we have finally reached the point now where Fed almost doesn't even matter anymore because they've reached hope. And I still stand by my call and conviction that this meeting, this FOMC meeting here coming in September, I think that that's their last hike. I think it's just getting mathematically tough for them to take it much further. All right, getting back to some of our prior roots here, we're going to talk about Nutrien and Intrepid Potash. So, since the last time we talked about it, Nutrien has come a long way. It's done very good. This is the daily chart. It's back above its 50. You see that we never lost the golden cross here. We are turning up on the moving averages. We have broken above several key areas of resistance. First of all, this descending slope here. We broke above, tested, came back above the major trend line, retested, and we are now advancing. This looks pretty good. I'm very impressed with what I'm seeing. I don't see anything crazy on the RSI. I think that this is rebounding and it's making its way back up after a massive sell-off. Now, remember, you could use this to help you suggest that the commodity return is starting to take place here, because in the case of Intrepid Potash, seeing the same kind of turnaround. We have broken above the 50. We have broken just above the 200 in addition to this major trend line. This major trend line was the last place that we attempted to buy Intrepid. Of course, remember a long time ago, we bought here and then we sold at 108. And then we tried to buy back in at 52, but it broke on us. And we haven't been following it since. But now that it's getting back above these levels, we can start really potentially looking at this as a nice another entry, perhaps another chance at that re-entry we were looking at a long time ago. So it's something to keep an eye on. I think it's going in the right direction. If we step out and look on the weekly, you can see that the volume was declining over time, and it's potentially working on trying to ramp back up. So if we can see follow through here shortly, this is going to be a pretty good sign. I mean, it's going in the right direction, and why wouldn't it? I mean, the whole basis for the investment here in the first place were fundamental reasons, and those reasons haven't changed. They've gotten worse. It looks like the Ukraine war is going to drag out even further. So this is a fundamentally strong company with improving technicals that we can start to evaluate once again and hopefully make money in again. We will go over a few ratios today, get back in our prior form. Now this is GDX to URA. This shows the relative performance of the gold ETFs to the uranium ETFs. And we had put up a potential head and shoulders or inverse head and shoulders pattern here a long time ago, something that we had been tracking. And we failed. This is a good example of a failed breakout. So if you start to see something like this in uranium, right, you're putting in the same kind of thing, though its shoulders are much fatter. But in those uranium equities, you're seeing the same kind of thing, right? So if we start to roll over and fail, you can expect the same kind of outcome here. And what this is really telling you is that uranium has been outperforming gold. Obviously, today was a big one. But this is a pretty big deal because this is a rather long-term trend. And we know that this trend was valid not only from these couple of touches, but if you zoom in on the daily, you can really see the spot touches through all this chop here. So this is a good trend line, and it's breaking below. So this is really telling us that URA is on track to outperform GDX for a bit. And that's a pretty big deal. That's worth noting, and that's why we're bringing it up. But again, how far will it go? Maybe a retest of this. That's a good bit more. Either way, both sectors are extraordinarily bullish on a fundamental level and a technical level too, especially for the long term. So it stands to reason that you should own both. But with that being said, this is kind of setup of the comparison between a super interesting chart here is GDX compared to XLE, which is the energy ETF. Now, as you can clearly see, we have stopped on what is significant historical support. All right. Now, let me change this up. I don't like my old line. I like my dash line. Look, we've got a perfect kiss here. Now, what this is suggesting to us is that the GDX is about to outperform energy, which might make a lot of sense. I mean, this is something definitely worth watching, but if we were to get a bounce here on this trend at these key levels down here, I mean, look at this, continues to go the same way. So what you're seeing is this divergence in the RSI. It's telling you that it's waiting on a turnaround, right? So this might be the ratio. It might be where it is, and it might continue to keep going down the way it is, but the market is really anticipating a reversal, right? You have a reversal kind of built into the desire of the market itself, right? It really wants to turn this around. It's getting very oversold. So you still have to wait for that break, but if it is going to, here's the perfect place, right? I mean, this is at key historical level. This goes back, this trend started in November 2015, so that's not insignificant. It's something to watch. It wouldn't surprise me to see this break. I mean, gold is underpriced relative to energy and has been for a while. But it's clearly in stark contrast to uranium, where uranium is poised to continue to outperform gold, whereas energy equities broadly now poised to underperform.